Good morning, everybody. Hopefully everybody's having a fantastic Tuesday morning. We're going to take a look at Bitcoin and a few other assets. We're going to do a little bit quicker of a live stream today. We'll analyze a few things, see if anything's popping off, and then I'll answer any questions you have. So if you don't mind, go ahead and gently rub out that like and subscribe button, and let's get into this. So Bitcoin's been moving up nicely since September's open. It has been making a nice little uptrend, as you can see here. You have an ascending trend line for the month of September. We tested almost the 382 of August's range. So September, as of now, after 1 week in to the month, we are looking weak. Just meaning that there's not enough bullish momentum to bust up above the 382. Now, the 382 does encapsulate about 3 weeks worth of price action, as right here is your weekly open. So that wick would be your weekly high, roughly at about 113,639. We do know that according to the liquidation indicator over here, we have about $3 billion worth of short stops setting at roughly 114K. You can see if you got up to that 114K, it would put you up into the 382 of August's range. On the 4-hour time frame, as far as resistance level that you're currently into, you have liquidated yesterday's swing high. That's right there. And you're also into the 200 exponential moving average, which if you look over here, that caused the resistance. And over here, it also acted as resistance. One could arguably say that you have closed the 4-hour candle above that, and you are pulling back on an intraday basis, but it looks okay. 21's all the way down here. And your daily 21 exponential moving average is right here, of which we closed above yesterday. So going into the daily time frame, you can see you have the 50 exponential coming in through here, acting as a little bit of near-term resistance. And there is yesterday's 21 exponential. You can see how you just barely closed above yesterday. So today, it does look like it is trying to, at least before the New York session gets started, trying to put in an upside continuation day. If we go up to the top monitor real quick, you will see that on the overall market, you do have the VIX gapping up, or it actually gapped down on the daily range, but is currently up. The S&P 500 over here testing daily open for support. You really gone nowhere for the end. Today's just Tuesday, but you really haven't gone anywhere. You're essentially unchanged on the week. We do have a little bit of news coming out at 10, I think. It's going to be, non-farm payroll revisions. So you could potentially, at 10 o'clock, see a little spike in the markets. We don't know how those revisions will pan out, but I'm assuming there will be some revisions. So just keep that in mind if you are looking to take entries at or close to the bell. So that's what we currently have working for us right now on Bitcoin's price action. I mean, on the small time frames, it looks okay. On the monthly, last month was a pullback. It wasn't a large pullback because we didn't take out August's open. We closed above that, so that's good. And this month, you're pulling back into August's range. So it's sideways. You're in a 3-month range here. The breakout of the range would be July high or July's low. And then you would want to see bullish continuation or bearish continuation beyond that point. So overall, we're stuck inside of a 3-month range here. We did get above it briefly in August, but failed. There was no bullish momentum. Once we did get above that level, you can see that's when Bitcoin went into a period of drawdown where it suffered 3 straight weeks in a row of downtrending price action. And here we are 2 weeks up, and this is going to be the start of week 2 in September. So right now, you're tight. You're trading tight. You're in a 3-week, 3-month range. All right. So essentially, you're not doing anything. Now, if you want to short Bitcoin today, obviously you can. You're still inside the moving average structure. You did close above the daily. So if you were taking a short on Bitcoin today, you would have anticipation of yesterday being a bull trap, as it was not only a close above the daily 21 exponential moving average, it also broke out and closed above the previous day resistance at 111,759. So as long as you're trading above 111,759, the bulls do have price action on the near term. So if you're looking for bearish positioning, the best place to mitigate that risk would probably be around or close to yesterday's high. If you go into the 4-hour time frame, you can see today's high is well up into the 113 area. So yeah, you would basically want to see price reject in this area and roll over, and then that 111 area would be the primary support. So more than likely, that will be the day's range unless you get upside continuation. If the bulls are strong enough to make price go up, maybe look to take profits up here around the 113 area. We go look at dominance today. Dominance has been weak. This is a 30-minute chart. Let's go look at the daily real quick. I don't really care about the yearly opening range on dominance because dominance isn't actually a tradable asset. So it's not like people are going to be buying the dominance chart at the yearly open. So I don't know if that's going to act as support. The reason you're testing that is because you do have several cryptocurrencies that right now that are actually testing the year open ranges. Pingu, for instance, is actually trading above the year open range for the first time in a little while. We did get above it here back in August, but it could not get any upside continuation, and then we got right back under it. So it does look like the bears are unwilling, are unwilling to be like aggressive down here around September's open, as you traded down there for many, many days before breaking out and then getting this 3-day rally. So when it comes to Pingu, like, you're looking like a bullish breakout here. We were watching it yesterday to see if we were going to stall at the yearly open or the August open, as those are two major confluent levels. You also have August's mid VWAP coming in there at the same place. So 3 major areas of confluence for potential resistance. Today we blasted right through it. Excuse me. I am watching this for a short at 2-hour supply, simply because it is a meme token. It doesn't really have much utility, and I think I'm just looking for a short here. I can't buy it after it's had a massive spike like this. The last place we were looking for shorts on this was way down here. So this spike has been extraordinarily large for this week. It's a much bigger range this week than we've had for the previous, the last few days of the previous weekly range. But if you go into the weekly candle, you can see that expansion. You are breaking out above, but you're not continuing above that weekly level, the same 3-week candle structure that we're in on Bitcoin. On Pingu, you have liquidated that high. So this would be the level that I would be looking to mitigate risk around if you're looking for shorts on Pingu. I have that level marked here and outlined as 2-hour supply. We go into the 2-hour time frame. You can see that 2-hour supply zone right there. I do currently have a short position on Pingu, and I am essentially mitigating the risk from that point. If at all Pingu trades above that today, I will exit that short position because the bulls are just too strong, right? Today is Tuesday. I know back in my early days, I used to say that we had a lot of data that says Tuesdays do oftentimes mark the high or low of the week. Well, that wasn't the case in 2024. We actually did the data analytics to see how often Tuesdays did call the high or low of the week, and it happened about 22% of the time in August. So I would not be hinging my short position on that analysis alone, right? As it's Tuesday, it's going to roll over. It doesn't happen as often as it used to happen, right? That's just one of the many things that will be ultimately priced out of these markets as time goes on. If you're looking at Bonk is also doing pretty much the same thing that Pingu is. You literally traded up and outside of the last week's high, and you did get a little bit of bullish continuation above that. Coming into the August VWAP here, I would suspect if you got back down to or around the September open, you would probably get a little bit of wiggling, as that's going to be where your current week's VWAP is. Also, September open, a pretty big level, and the weekly 21 exponential is right there as well. So when I'm analyzing price like this, generally I want to have a bias, and that bias will generally hinge on, as far as longer term biases will go, based on weekly closures in and around the 21 exponential. You can see you're breaking out above that right now. So a pullback to the midpoint of this current week's range would be a weekly demand test. You could find support there. That could be a buying opportunity if the crypto market is not done. I don't see any reason to suspect that it is done, right? I have no reason to suspect that risk markets are going to come off. Basically, everything that we were looking at last week and the week prior to that, suggesting maybe we were seeing capital rotations out of risk markets into safer assets, basically last week got smoked. So everything still looks very bullish. We're getting closer and closer to a rate cut decision, which the market is pretty much anticipating a rate cut. You can look at the Fed cut or Fed watch tool for that information if you want, or you can just simply go over to the bond market and look at the 2-year yields, as the 2-year yield generally goes in the direction as the Fed rate cuts will go, right? If yields are pulling back here, then clearly the market is pricing in a rate cut. You can put up the Fed watch tool with that if you want to see how good these things do typically stay in line, but it does look as if though the market is pricing in a rate cut. Rate cuts are typically bullish for risk assets. All right. Now with cryptos, it's a little bit different because, especially with Bonk, Fartcoin, Pingu, and Doge, those are meme tokens. So those are the riskiest of risk crypto assets. You do have one right now that is in the process of pulling back. At one point, this thing was up almost 300%. I mean, it has literally been going straight up for the past couple days. I don't know how or what your exchange has been doing with this product, but with my exchange, the week's exchange, the funding rate has been so skewed for the bullish trade that it was literally too expensive to even take a short on this thing, all the way up until when it started to roll over today. Once it started to get a little bit of downside momentum, then the funding rate started to get readjusted to where it's not so significantly expensive any longer. So you can see right up here is that funding rate. It's actually structured more for bears than it is for bulls, but all day today coming into the session and all day yesterday and the day before that, this funding rate has been paying longs in a severe manner. Like at one point today, this was a 1.8 something. So like if you were just long at a decent spot, you could have been paid handsomely every single hour, because this is paying out on an hourly rate. That is why this thing was literally only going up. So when you're looking to short assets, especially crypto assets on offshore exchanges that are up significantly, like 100%, 200%, you need to wait until the funding rate switches to positive. When you have a positive funding rate, that means the longs are paying the shorts. Because when the shorts are paying the longs and they're paying them handsomely, excuse me, your professional traders are not going to jump in and try to short an asset that is up 300%, right? Because it's too expensive. They are literally paying the longs a lot of money to just hold a short that is working against them. So now the funding rate is getting a little bit more normalized. I would expect a pullback on this, as like I said, if you look at this thing on a daily, it is literally disgusting. I mean, look at yesterday, the day before that. Like, you can't even see price action over here. That's how insane. This thing was trading at $1.25 on Saturday. Today it was trading at $18.60. Like, come on. That's an insane rally. Over 1,000% to the upside. Simply because shorts could not take the position based on funding rates. Now, that's on my exchange only. That isn't market wide. Every exchange can turn their funding rates up however they want. So your exchange might have had a normal funding rate, which allowed you to jump in the short trade, but not realizing that that's not market wide. Other exchanges might have a more, have it structured the opposite. But it is pulling back right now. The other one that we were watching yesterday was TA. We were looking for TA to roll over. We had 3 lines drawn out on the chart. Excuse me. These 3 lines were the levels that we were watching for price to potentially roll over at. I ended the stream right before we got up to the 3rd level. I don't know if any of the people that were in that stream yesterday were able to jump onto this short, but I was looking for it to dump. This is a pump and dump. And you can see that because of the last time you had a magnificent rally on this. When you see these kind of candles, that is literally whoever owns the majority of the supply, they are dumping their controlling shares. They are literally getting out with huge chunks of this asset. And that's what causes these massive candles to the downside. So basically all I did to pull up these levels was to look at a 15-minute chart, because this reversal happened in the span of 20 minutes or 30 minutes here. So you can, if you just pull this tool up, you can see with two 15-minute candles, you in a sense wiped out almost 50% of the asset's value. So whenever you see something like that, that is generally a pump and dump. So when we were down here, we didn't want to take any, not any massive short opportunities on it, because we were looking for a potential run into these areas, and these 3 areas is where we were looking for that whoever was causing that pump and dumps, that scandal, to initially exit again. And they did right on cue. But like I said, I missed this one. So I was able to catch the other one, as you can see right here, on just a small $128 position. I'm currently sitting at $565 profit. Now, did I eat a stop or 2 to get into this? Yes, I did. I ate 2 stops before I then decided to wait for the 1-minute chart to at least put in a lower low before I got in it the last time. And the last time has clearly paid a lot more than I lost on the first 2 attempts. First attempt was roughly about 4:30 in the morning over in here. I did hold it. It was when it came up later that stopped me out. But if you look at the 1 minute time frame, you can see that when it does put in these moving average, over here, when it does put in these moving average tests, each low is higher than the previous significant low. So I, in a sense, just waited for it to put in a lower high and then a lower low. And then I went back out to the 30-minute time frame where I initiated the short sell, was on this move up right here on this 30-minute candle as it pushed into the midpoint of this candle, because this was the first 30-minute candle that made a lower low. That's a higher low, higher low, higher low, higher low, higher low, higher low, higher low. So it wasn't until we got a lower low here, this candle took out 2 swing lows. So on this candle's retest of the midpoint of this candle, I entered the short position. And now it is looking a little bit blow-offy here, at least in the meantime. This could literally find support if that funding rate goes back to negative 1%. Then I would suspect buyers will come right back into this. So be very careful if you're trading MYX today, because it is moving. It did trade over 1 billion tokens in the last 2 days. 1 billion. That's a B. That's a lot of volume. So most of your momentum scalpers that scalp in the crypto markets were trading this asset yesterday and today. Most of them, if not all of them. So yeah, be careful. Be careful with this. It could literally switch directions again. You are barely red on the day. And really and truly, unless you take out yesterday's midpoint, it's not going to even look like a pump and dump. It's going to look like a standard pullback correction. Retest. That's it. So, but there's plenty of meat on that bone. As you can see, just doing a midpoint test on that daily range would be 50% of the asset's value. It says 45, but I didn't run from today's high. You put today's high in the mix, you're going to be real close to 50% of the asset's value. And that's more than just a pullback, clearly, right? It's just the way it looks because of how it was so insanely bullish the last 3 days. But I mean, if you're going to stick to the normals, Bonk and Pingu, I like Pingu the best for the short, because if Pingu ultimately is able to break down below all of this stuff, this red line that I have on the chart, it's going to potentially give back a lot of these gains that it got all the way back in July. So that's the only reason I like the short on Pingu. It's up more still, so it is stronger than a lot of the other alts, as Fartcoin has already given back all of its July gains. So I don't want to short something that's already been hammered into minced meat. I would rather short something that still has a little bit of meat left on the bone. But yeah, that's what I currently have for you. The short position that I'm in on the Pingu trade is at that 2-hour supply. So once again, if price, for anybody that's just joining us, if price is trading above this price today at any point, I will exit the short trade, as there's just too much bullish momentum here. But we will see, now that we got the bell, if the sellers do in fact think that today might be the high of the week. 10 o'clock, you have non-farm payroll revisions. It's generally not a big market mover unless the revisions are large. If the revisions are larger than expected, then it could potentially move your risk markets. Now, Tesla did ultimately find support for us here, and yesterday was up almost to our profit-taking area of 360. It fell just shy of that and rolled over. So I would love to see it hold support here at the 100 exponential moving average on the 30-minute time frame at 345. That is the area of support that I want to see hold today. If we break back under that level, there is a strong possibility that I will close out my Tesla long. And then ultimately here on the USO short that we were looking for short side entries yesterday, we did ultimately take the short as it did trade back under the July open. This was the level of potential resistance that I wanted to see price stay under, as we are breaking down, or on Friday, we did break down out of this symmetrical triangle. So what I essentially wanted to see was a retest of the July open, a rejection of that price, and then I had a downside price target of $70, which is June's open. But as long as it's trading above the July open, the threat is back to the top side of this triangle, as this right here will be a false breakout to the downside. So if you are sitting in this position, if you start making fresh daily highs today, you can technically still hold the trade short because you're under the 21 on the daily time frame. But if you close the day out above that, and that price is coming in at 74.35, if you're closing anywhere above 74.35, you should really think about exiting that short position. All right, as of right now, you could exit it because we are above. We did gap up above, and that's the second day in a row. Yesterday we had a gap up, but we rejected this level pre-market and rolled over. But this is 1-2 days after the breakdown. Both days you gapped up. The shorts are stuck. I'm in it short. I am stuck. As long as price is up here above this July open, I am stuck. That could potentially put more buying power into the market as the shorts that are stuck start exiting those positions. So be sound mind today on USO. Keep this thing on watch. If you're in it short, make sure you're watching where price is in regards to that exponential, the 21 exponential. All right, perfect. That's pretty much all I got as far as what I'm looking at, what I'm keeping an eye on. And here on the IWM, I don't have the IWM up. What's the IWM doing? Let's just pull it up here. So the IWM is still trading up, but it's pulling back a little bit this morning, which, I could see a pullback happening because the VIX is up off of the 2025 lows. But I'm not looking for an extensive VIX spike or anything like that. We got one of those last week. So I have more of a bullish bias this week than I had last week, because the VIX is pulled back off of that 1721 level, and that is your yearly opening range. And as long as you're trading underneath this level on the VIX, you kind of have to have a bullish bias or have a buy the dip mentality when it comes to the S&P 500, IWM, NASDAQ, all of those type of things. Bitcoin even, right? Now we do have the open here on the 5-minute time frame. You can see Bitcoin is struggling a little bit getting anything going. We're only 10 minutes from the bell. So high of day on Bitcoin's 113.3. 114 is about where that $3 billion liquidation would start to occur on Bitcoin. So if you're putting in bullish candles above the day high, there is a high likelihood that price is wanting to run up there and liquidate those shorts. Almost $3 billion worth of shorts setting at 114, according to this indicator. It is an indicator. It's not actual limit order setting in the market or positions. This is just an indicator They use past price action to essentially predict where liquidity could be. It isn't a guaranteed liquidation. So if you got up in here, you might not actually see $3 billion worth of liquidations occur on the liquidation map, but it is potentially possible. Like even on this tool right here, it's not even anywhere near $3 billion worth. But this is where the white hot liquidity sets. So that's roughly around 114. So yeah, yesterday's high is going to be a pretty significant area, I would assume, for shorts to start piling into this today. And yeah, if the bulls are in control, they shouldn't have much problems getting it above that. I'm actually trying to see what the volume signature looks like today, but for whatever reason, that is not pulling up here. Oh, because I had it turned off. I thought it was on. So yeah, I mean, the point of control is at the top edge of the daily range. That's not super bearish. It's not super bullish either. Generally, the super bullish stuff is when the point of control is setting at the bottom of the daily range and you've seen an expansion away. So bears are trying to jump on it here. But this can cause price to roll over just as easy as if price continues to go up. It could cause a short squeeze from new short sellers jumping in, throwing their stops above the day high. Because just like I can see and you can see yesterday's high, so can everybody else see that level. So that's pretty much where people are going to be mitigating risk from. And then the high of today. And then let's go look at Ethereum lastly here. And then if you have any questions, now would be the time to get them in the chat. So that way I can either look at your favorite asset or answer any questions that you may have for me. All right. Give me 1 second, as I do need to keep this on watch. Or at least keep it up. All right. So here on Ethereum, let me just back out real quick just to make sure none of my key levels of interest have been destroyed. So we're definitely still trading inside August's range. We're an inside week currently. Yeah, and then a breakout underneath this and a push would be considered still inside, right? It's still inside. You're not really breaking out of anything until you get out of this Monday, August 18 week. It's going to be the third week in August. It is what it is. The weeks, the month actually for August started on a Friday, so that's not going to really line up. We're in the second week of September now. There's only 2 weeks in August, I think. I mean, 4 weeks in August. Sorry, not 2. Yeah, 4. I mean, 4 full trading weeks. Because you opened on a Friday and closed on a Sunday, you do, in a sense, have 5 weeks, I guess. It is what it is. I would be okay if it just broke down below this bearish candle. Because last week you did break down below it, but you couldn't get continuation below it. So at any point, if you fail to get above last week's open, it's going to look more weak for this week than it is strong. As today is Tuesday. So if the bulls are in control of price, we would typically want to see them continue today. We want to see what happens. But the big day that will make up the majority of the weekly price action for this week is going to be Thursday, as that is when you have CPI. So you may trade sideways all week until Thursday, and then Thursday might give you your weekly high and weekly low, or weekly low and weekly high. That's just how it is. When you have a very light VIX, when the VIX is very low, your price ranges tend to be sideways and small. And that's exactly what we're seeing here. This trend line has no meaning whatsoever for me. I just put it up there. You are currently trading above August's volume weighted average price, as that is literally what held as support for Ethereum. Nice. So this should be blue, not green. And then that's perfect. Okay. So right now, Ethereum is trading above August, September, and this week's VWAP. So currently right now, for today, clearly it's bullish. Clearly it's bullish. So your price action is more bullish today than it is bearish. However, you are trading off the highs. I think the best trade on Ethereum would have been a buy the dip. Unfortunately, it's a little bit too late for that, because this would have been the dip to be a buyer on. But you wouldn't have been buying on the VWAP, you would have been buying on this swing low. There isn't a previous 4-hour swing low. So it's just an hour swing. It's just the last hourly session swing low. As once price got back above that point, you could have been bullish, given today's price action is or was early session extremely bullish. As here is your open of the day. So the Asian session come in hot, selling it, setting the day low, and then they bought it right up. London followed through. No, they did not. London actually sold it. So New York is going to carry the day. Your Asian session set the low. London session has set the high. It's going to be up to New York to basically finish the day. If it's going to be a down day, you could watch hourly res or the last hour swing high, or the last 4-hour swing high. For risk mitigation purposes, if you are looking for shorts, I don't like this structure for shorts on Ethereum. So keep an eye on dominance. If dominance stays weak today, maybe don't look to short Ethereum. If dominance picks up, I still don't like it. The trend is down, so any move higher on dominance could be faded. And that would have more of a bullish ramification for altcoins going forward today. Good morning, Brian. Good morning, Lifestyle Media. Peter, Wes, what's up, Wes? Where have you been, bro? Good morning, Janet. Hope all is well with you, Wes. Damn, it's been a long time, bro. Hope all is well. Yeah, let's go look at ADA. Absolutely, I have no problem looking at ADA. My man. Been a long time, brother. ADA looks, oh, this is not. What just happened? What just happened? Thank you. Never mind. I take that back. Yeah, ADA is still trading in the same range that Bitcoin is trading in. You're in a three-week range here. You did break out last week below the previous week's low, but you could not keep downside continuation, where then you closed back bullish. You are seeing that advance continue. On the weekly time frame, you're trading above the 21 exponential moving average, which it just signifies that the bulls are still in firm control of the asset. They're in a buy the dip mentality. The longer term traders, they're literally buying 21 tests. And since you're seeing upside continuation from that point, then I would consider buying another retest in the future if that were to occur again. Now, as far as your near term day traders, give my internet a minute to catch up. It's not the internet, it's actually the charting platform, because the internet speed test was golden. I'm not exactly sure what's taking TradingView so long this morning, but here you go. So yeah, breakout and above the yearly move or the yearly opening range, we typically will have a bullish bias. If you are also closing dailies above the 21 exponential, then clearly our bias would be higher. Like, the confusing part about this today is, well, then why are you shorting Pingu? Because it's doing the exact same thing. It's above the weekly, it's above the daily, and currently above the yearly opening range. Pingu is it's a lot cheaper than this is. This actually has a use case. Like, this is a crypto. I mean, it's not the best one of the bunch, but it is up on the year, and it does have a use case. Pingu is more of a meme token, and honestly, yeah, I mean, technically speaking, you could have a bullish bias on Pingu because of those facts. Today is going to be a very, very crucial day for Pingu, as it's going to potentially be, well, no, it isn't. So Pingu isn't even close to a short. Yeah. As long as you're trading above the August open and the yearly opening range on Pingu, you can look for bullish positions. Me looking for shorts up here is just front running my own bias. Like, I'm going against trend trading philosophies here and implementing human weakness. Not really a strategy to implement in a trending market. But yeah, as long as you're trending above the daily 21, you should be in a dip buying Yeah, you get what I'm saying. So ADA looks like that, right? It's structured pretty good. You saw that bullish the bullish expansion happen Monday, Sunday, and going into Monday, and even today. Even today, you're expanding upward. You liquidated this key structure over here, and you did not instantly reject. Instead, you have seen follow through. On this 4-hour candle, you retested that liquidation point, and so far, that level is holding. So you shouldn't have a bearish bias. This looks like a 3 candle formation happening here. There's still 2 hours left on this candlestick. So this is an expansion above a retest. So this candle could potentially put in a higher close. I guess if you struggle to trade above 4-hour resistance, which is just this candle's close because it's the highest closing 4-hour candle in this near-term structure, if you're failing to trade above that, then maybe you can say there's a little bit of weakness coming into today at the highs. But I mean, it's not a great trade because you're going against near-term intra-week trend. The last 3 days have been extremely bullish. Yesterday was a great close on Cardano. If the moving average would have been higher up on the range like it is for Bitcoin, then I would be looking for this to potentially be a trap. But this isn't signaling any kind of trap whatsoever. This is saying not only is yesterday not a trap, you're seeing buyers buy higher. So there's plenty of demand on the near term for Cardano. Plenty of demand for it. The Bitcoin structure is a little bit different, as it barely closed above yesterday. So as long as you're trading on Bitcoin, as long as you're trading below yesterday's high, there is a possibility that today does end up closing back under the daily 21. But you would need a rather large bearish move for that to happen. You got news coming up in 5 minutes. Is it big enough news to do that? Maybe. It is an NFP revision, so it is potentially big enough to do that. And Pingu's currently doing kind of the same thing. But, I mean, Pingu looks like ADA. Your daily 21 is all the way down here. So this doesn't look anything like a trap. So, I mean, it doesn't look like a good day for shorts. Also, the watch list is pretty green. Pretty damn green. Here's your watch list. And that's not counting the several. There's, you know, the MYX USD is down now, but it was up almost 30% at one point today. TAU is down, or TA USD is down. And then MUSD is down today, but clearly not bearish. It's just down today. And it looks like it's trying to give back most of that downside move. Yeah, it's a 15% retracement, so that's perfectly in line with a standard pullback. I mean, this doesn't look bearish at all. This was not quite a bearish engulfing on M. We don't need that. But you traded right back up to that point. So for me on M, if it fails to trade back under this 4-hour swing low, I could be a buyer. Let's see. I need to take profits on that. Let me go ahead and close that big trade down. Let me put you guys up there real quick. So I'm just going to take 75% of the profits off of this real quick. And we're at what, 389? Let's just go 400%, and we'll close 75% of the position down. And then we'll set a stop loss at 0 and do this. And then we'll see if we can get filled on that. It would be close to a 400% return if it comes back down, but I might have to chase it a little bit here. The funding rate is still good as it's positive. So the longs are paying the shorts, though it may ultimately roll over. So I do want to hold a little bit of the position, at least for that potential. But when the profits get up to be this large, you got to take profits, man. You can't be that stingy and expect like a 50% drop or something like that. If you could get in, like if it does continue to move up for whatever, like you could watch the previous 4-hour candle swing high and open. As if you're above that, there's a high potential for running up to this one. So there's no point in looking for shorts higher than 1530 until you get above 16, right? Yeah, we may have to, let me see what this is doing on a intraday basis really quick as you're back to open on the day here. Yeah. The 1 minute is still well beneath all the major moving averages. 30-second is into potential resistance here. I don't love the fact that it couldn't get downside continuation from the 786 of the daily range. Not saying it won't do it later, but we'll see. And it's trying to fill me right now. I just need a 5-cent drop. Not gonna give it to me. Of course not. So we'll move it up. Yeah, it looks like they're back in buy the dip mode here. Let's move it up just a little bit more. As long as we're under the $400 mark on profits, we're okay. The day open is roughly in this region, and that's what you're going to have a lot of volume coming in here for. Not quite sure why it did not even want to drop 5 cents. This thing can run. Very volatile price action here from lows to where you're currently trading, up 19%. So from this candle's low to here is 19%. So we're going to have to get out of this. We don't want it to start a rapid expansion back in the upward direction, which it could. They give it just a second because it's into a potential area of resistance, but it's not rolling over. Yeah, once you start putting in those higher lows and higher highs, you really gotta be quick. Here, let's move this up here. I don't want it to go all the way back up against me, because it could do that in just a split second. As you can see, it's literally not even making lower 30-second candle lows. Like, that's how strong of a bid this thing has right now. So for the last 2 minutes, it's just been straight going up. We just want to get out with the majority of our profits. There we go. We got filled. So, yeah, not as much as it was, but we can't control what price does. It's not what we do. Not what we do. What we do is we look for good opportunistic areas to mitigate risk. What price does in between that is completely out of our power. It's what we do that determines whether or not we're going to be profitable or not. So that trade is situated. I can get it off the monitor and just put up Pingu, as this one has a full size, or not a full size position, but a standard normal, try to make a couple $100 position. And it's looking okay on the 30-minute time frame. I like that bullish engulfing, and I'll like it a lot better if we put in a fresh low to the downside. Clearly, I would like it a lot better. But I do need to get a stop on this. I was not aware that there was not a stop. We're not even in the take profit realm yet on this one, so I'm going to set this at a 3% stop loss, which means that I'm going to get out of it for $10, a $10 loss if it goes back in my face. We're doing okay on the week. This week hasn't been as good as last week, but I don't want to take a bunch of trades that I don't need to take. And second, if we look over here at the watch list, like the thing that is hot today isn't even got 1 million coins traded. So this is not something that I would trade anyway. But I did look at all these other ones like Wild or WLD USDT. It's been hot as well. It's up 44% today. But you can see that it is pulling into a potential area of support here. So for this, we would want to see, is it basing? Let's go to the chart with it. I mean, that is a chart, but I can look at it better here. We'll pull up Binance's. It's got the most data, most likely. If it's basing on the 5-minute time frame, very illiquid, even with billions traded. I don't like that. Let's see if we can find this spot crypto. All right, well, where's the perpetual swap? Right there. That's going to give us better candles. Yes, perfect. It is basing, but also trending lower on the 1 minute. On the 5-minute, it is not basing yet. It started to base, but then it had this move to the upside, and then it was immediately reversed. So we need to wait for it to base first. Now, you could arguably call this a basing structure. And you would want to see this basing structure hold. If it does, then you could be a buyer at 185-ish. The problem is the funding rate is geared more to the shorts, as you have a positive funding rate. It's not a huge funding rate, but it is big. Usually you want to see 2 zeros in front or behind the decimal point. So you want ultimately 3 zeros, 0 spot, 0 0, then the 100th or 1000th place is where you want to see that whole number. So it is a full place up. So it is, you know, it probably isn't enough to skew heavy buying pressure. But if at any point this starts to change, and it does, if you have a basing effect, you would more or less want to be a buyer. It's a pretty significant drawdown from the highs too. But the biggest one that's trading is MYX. It's the one that has the most volatility. As long as that's doing that, we want to keep the short open. And then it does look like Pingu did take out, or is close to taking out, that 30-minute low. And it is. So that's good. It's going in the right direction. So if Tuesday is going to call the high of week, then maybe the high of week is in on Pingu up here. But yeah, I mean, I like it holding resistance at August's midpoint. I just do. I mean, that's really the reason why I like it lower. I mean, it is a very bullish move for since Sunday. Sunday, you were moving up. Monday, you moved up. Today, you were moving up. But you're just now coming into like a huge, crucial level of potential resistance, being the previous month's midpoint. So if it is going to be a bearish month, we would expect the monthly high to be set somewhere in this area. Maybe not exactly here, but in this vicinity. And it could even get as high as the 786, but way up there, I don't really care for the short. I would much rather see it fail here, like in Bitcoin's case, or under the 380, as that just shows more significant weakness. A midpoint check isn't strength, but if you're trading above that point, it is pretty strong. So basically, I'm looking for Pingu to set the weekly and monthly high today, if at all possible. Obviously, I can't see into the future, but if that is what happens, then next month we'll be down in this region somewhere, and that trade would look really good. Right? That's what we want. We don't always get it. Good morning, Janet. How are you this morning? Can you please look at Cardano? We looked at it. What's up? And good morning, Near Pumped. Let's go take a look at Near. Yes, it did. Yes, it did. Pretty significantly. It made a fresh August low, but that happened the first day of the month. So he liquidated August's low and rejected. Lovely. We've only seen that happen a million times. And it always sucks when I miss those trades. It is what it is. It held the open for support. The open of the month also was like a beautiful daily demand zone. So yeah, it would have been a huge level to watch for us if we would have had this on the watch list. Going into the weekend, we would have definitely been watching 236. Profit target for me, had I got long down here, would have been here. So, I mean, yeah, it's pumping. It's pumping pretty damn good today. 861 on the day, not bad. You just did make a fresh 30. Oh, no, you did not. Just a hair short of the low on Pingu. And it's starting to bounce a little bit. So I wouldn't doubt it at all if I get stopped out of this trade. Because a lot of these things look really strong today. Where is this in regards to last month? I hate when the monthly is mostly wick. But given the circumstances, it is still August's range, even if it is. Wait, why does that look like that? That looks better. Let me see what's going on with that real quick. Because I noticed on the S&P 500 also something similar. No, that's perfect. It was just off. But still. Yeah, I mean, people are taking profits. The professional traders out there, your mean reversion strategies and even trend following strategies, especially if September is known to be a pretty bad week or month, and August is known to be a pretty bad month for cryptos. So knowing that professional traders that caused the pump are taking profits at the 618 of last month's range is completely understandable. It's what it does going on from here that will be huge for the rest of the month. Now, where would we expect support to come in here? At the August Open. That's where the 21 is. So moving on for the rest of the month of September for near, if you're watching it and actively trading it, your buy the dip area would be $2.53. And that's only if you don't get down there in like one day. If you get down there today or tomorrow, then you'll have a lot more momentum going into the level. But as long as you're like failing to break under it with any kind of momentum, then I could potentially be a buyer there on near, because it does look okay. Now, the moving average structure on the daily is not bullish. It is not bullish. Your 200 is above the 100. Your 100 is above the 50. The 50 is, for now, still above the 21. It does look like it's trying to fix it. But, I mean, you can see what happened when you got into the 200 there. What happened when you got into the daily 200 there. What happened when you got into it here. So, I mean, they took profits when it hit the 618. It was also a liquidation above this swing, and that is going to be a weekly. Yep, because here is Monday. There's your weekly open. That is a key week swing high, not just a day swing high. So you liquidated the previous week's high. So see what happens moving on. It's okay that you see a little bit of downside coming from the resistances. It's just profit taking. As far as like higher levels of potential support, for upside continuation moving on Thursday, because I mean, Thursday's when you're going to get the big data, right? The CPI. That's the key data point that everyone's waiting on. What comes out Thursday will almost seal the fate for the rate cut, right? So 258 or 253 are levels of potential support to watch moving forward. And the 258 is just a moving average. It's not an objective level. It's not going to be like a key monthly swing. But yeah, if it can hold support above August's open, I like it. I like it higher because you are trending nicely for the month of September here. Absolutely. You could arguably fib this September range and watch for a midpoint check of that. See where that puts you. Let's make this one green as to not be confused. Yeah, I mean that you got a lot of confluence here at 253 for potential upside continuation. Yeah, keep it on watch. Keep it on watch. 253, if that area holds a support, you could be a buyer there. For bullish continuation in the month of September. Do you trade Polymarket? Yusuf asks. I don't. If Polymarket is an exchange, I do not trade on that exchange. It is a crypto, isn't it? Like, don't they have their own token? You said Polymarket. This is Polymath, so I'm not sure. But I do not trade on Polymarket. That's not even a crypto. Polymarket is that betting site, isn't it? Let me see here. Yeah, okay. No, I do not trade on this. No, I do not. I will sometimes look at it if I'm looking at something specific. Wait, what? Oh, yeah, that's a rate cut. Yeah. So, I mean, clearly the majority of people think that you're going to get a rate cut, 25 basis point rate cut. That's probably what's going to happen because that's where the majority of people are putting their money. They do have statistics to see how often people are on this website. And I think it's pretty skewed to, like, when you have a blowout like this. Right now, as far as we didn't get a major tick up on unemployment. So, I mean, if the Fed was planning on cutting interest rates anyway, then they're still going to, right? Because really nothing has changed. The data points that we got last Friday was the unemployment it was like kind of a non-issue. 0.1% up on job market numbers is not terrible. So here's your unemployment rate. It was a tick up. I'm not saying that it wasn't. I'm just simply stating that it was only a 0.1% tick up. If it would have been like a 4% tick up or 0.4%, something like that, that would have been much bigger. Like, then people would be like, oh, yeah, they're definitely gonna cut. But yeah, the tick up's not good. You are trending up here for the year of 2025. In fact, you have been trending up for the last 3 years on the unemployment rate. Hence the reason for the rate cuts. Like, yeah, everything is situated real good for the Fed to start cutting rates. A lot of people are saying they should have cut rates sooner. Back when inflation stalled out, they should have gone ahead and started cutting. But, I mean, it's potato. I could make the point for both sides of that fact. Like, you don't want to cut too soon, but you definitely don't want to wait too late. we've been in restrictive policy for a long time. So I think the Fed doesn't really start to even get concerned with the unemployment rate until it gets up closer to 5, like 4.6, 4.7. That's when they start thinking maybe something else is going on. But yeah, I mean, everything is still good for rate cuts. And this tick up is just going to help that. I was trying to find inflation rate. I think that's right there. Yeah. You don't need moving averages for this, but yeah, I mean, your inflation rate pretty much bottomed out in September of 2024. You haven't really gone anywhere since then. So if this spikes, then you'll start hearing people talk about rate hikes. Because rates are what the Fed uses to combat these two numbers. That's all they can do. High inflation, they raise monetary policy, or they raise rates. Low inflation, high unemployment, they lower rates. So they're going to lower rates, and the markets are pricing that in. The bond markets are pricing in a lower rate. So unless you get like a massive miss on the CPI data, I don't see them doing anything. Here is the PCE month over month. I don't have the year over year data, but this data they keep an eye on. Way up here, they start to get a little bit more concerned, and then they probably don't want to cut rates. But down here, I don't see why they can't. Looks okay for rate cuts, is basically all I'm trying to say. Everything still looks good. Bonk is actually negative on the day now. So Bonk is actually seeing a pretty significant pullback here. It also found resistance at the midpoint of August's range. This last week open level is not last week's open. It's this week's open. It is definitely not last week's. But also this weekly still looks good for upside continuation. 3 wicks to the downside and a move to the upside here. So, I mean, this looks okay for continuation. What you're seeing is just a pullback for now. Just a pullback for now on the weekly range expansion. For the month of September, as long as you're trading under August's midpoint, it suggests weakness. As long as you're also trading under August's volume weighted average price, it suggests weakness. But it doesn't mean it's going to stay like that. So today could put in a very small down day. We could see something like this today where it pushes down into like the week 21 or something and then closes like that with a wick down. And then tomorrow you could potentially see the market open, push, take out this candle's low, and then close like this, right? And then you no longer look weak for the month of September. So nothing's out of the woods here. It's just basic sideways price action. You're not trending up. You're not trending down. You're just in the middle of the range from last month. And once again, same as like Pingu, the sellers just, for whatever reason, they lost steam down in this region. They couldn't get it to break down. They're just not as aggressive as people think the bears are right now. The bears are not aggressive. They're just not. We have a very low VIX. When the bears are aggressive, that VIX will spike. It will spike hard. So yeah, Bonk looks okay. Bitcoin pulling back a little bit intraday here, finding resistance. at yesterday's high. See what I mean? That's what I was talking about. If you're going to see a pullback today, then there's no reason for prices to trade above yesterday's high, as you've already liquidated yesterday's high through here. And if you remember when we were trading up here, I was essentially saying you're not seeing that bullish upside continuation like you would want to see right off the bell. It was stumbling there, stumbling down. We got the revision, so that this is your 10 o'clock candle. That's that revisionary news that I was telling you to be mindful of. And that's what gave you the expansion lower. It's still very consistent with an intraday pullback. Nothing major. If your daily 21 EMA holds intraday today, like if you stall out and you can't break down for a few hours, you might want to be a buyer in this region. Just try to tie it to an objective level, not the moving average itself. There's an objective 4-hour swing low right there. You could potentially look to be a buyer at. You have a 4-hour demand zone right here that you could potentially bounce from. So there are a couple objective levels to watch for intraday support to form. I wouldn't be a buyer right here, right now on it, not with it looking like it's trying to roll over. Let that volatility be subdued a little bit first, and then maybe see if that support's holding later on. I would like to see 30-minute or hourly candles throw wicks under, but be unable to close under. That's what I would really like to see. It just like kind of stalls out. Your intra-week volume weighted average price there in green, right now trying to hold as support. There are a few key levels right in here for Bitcoin to find support at. Let's look at the revisionary data and see if it's like so negative 18 was the prior number, negative 919 is the number. So there's your revisions. I know you can't see that. There you go. They don't even forecast this number. But yeah, the market didn't like that. They wanted to see a revision in the up direction. They wanted this number to go that direction, not sub that. Not great. We'll see if it has longer lasting effects on Bitcoin or not. Where is that high flyer? Whew, this one's getting beat up today. This was a pretty big mover. Well, no, it isn't. Why did this? Oh, yeah, we were looking at this yesterday. It was actually breaking down, wasn't it? Yeah, it started a base here, but that base did not hold. Boom, broke down, and then it said, see ya. Tried to base here, couldn't hold. MYX almost up 30-something% today. Up 11% still. You just closed the 15-minute candle back above the 21 exponential. So if it's going to rip, I would expect it. I'd be expecting that stop loss to be triggered. Might be another opportunity here. Yeah, if it gets above this swing and like fails, I might put on another short on MYX because it's moving phenomenally well. So let's keep an eye on this real fast. Funding rate is back to the bids. So no. Here, let me show you this so you can see it. Right here. This is exactly what I am talking about. You see that funding rate? At 0.2. That is super expensive. And that little dash is your negative symbol. That just means that your funding rate is negative. And when the funding rate is negative, the shorts pay the longs. So this position is currently every hour, not 4 hours, not 8 hours, on an hourly basis. It's paying the longs. So whenever that happens, whenever the funding rates get jacked up like this, the buyers are like, hell yeah, I'll take free money just by holding this position. It's harder for me to do that, especially on an asset that is this volatile, because it's just crazy, crazy volatile. But you have to be careful looking to open fresh shorts when that funding rate is like that, because you know that you're going against, not only you're going against the trend here, but you're also going against big money traders who want to collect that funding fee. They know just as well as you and I know that 11, 12, 1 o'clock, pretty sideways. So 3 hours, they could gain a funding rate. It just puts more buying pressure in the market. When you're trading these top movers, whatever exchange you are using, keep an eye on this. We traded M the other day when it wasn't even this high. It was 0.0, then a number. I don't remember what that number was, but it was crazy. I sat in that trade for 6 hours and paid almost 10 or little more than 10% of my unrealized gains to funding rates. So now if you can flip that on the head and be a buyer when the funding rate is skewed to longs, then that means you could gain like an additional 10%. Whatever you make in unrealized gains because you're on the right side of the market, and the funding fees. It's not so easy to do that though. So here is where we were expecting it to, if it flips, rejects, then maybe we put on a small position, bring our cost basis down a little bit more. Ooh, really wouldn't be adding much to it. So the limit would be what's that? That high is 1595. So just, we want to limit. $15.94. It will open a short position a little bit bigger than, we're not going to open it. We're going to open it if we liquidate that high and fall back under it. If it continues to go up, we're going to get stopped. And this probably will not work because of that funding rate. But I don't mind jacking the position up a little bit bigger. Already made $300 on it, or close to $300. So yeah, I'm game. And the Pingu short's starting to work out pretty good down there at 250 on the profits. Not realized, it's unrealized. So if this starts to base, well, it was trying to base here, but I would say it could base down in this region and still be okay. 1425, if it starts to base in that area, you have to be very, very cautious about entering the shorts. I think it's probably done enough today as far as pulled back deep enough to where maybe the funding rate won't be pulling in those buyers like it has been for the last 2 days, but it could. It absolutely could. What did we pull back here total? From high to low. Because we, in a sense, did we make a fresh day low? We did not. So we pulled back 33%. That's not, if it was closer to like 50, then I would say, yeah, it's probably done. But I don't know, man. Yesterday it pulled back quite a bit too. Yesterday it pulled back 32% and then got bought up. So today it pulls back 33% and so far has been bought up or bid back up. So it doesn't really look good for sellers. And your point of control is still down here. If it would have migrated to up here, that would be a little bit different. It didn't. Like I said, the big sellers are going to stay out of it while that funding rate is so jacked up. But it might not have been, it might have just been on this exchange. The funding rate could be normal on Binance. I don't know. I don't have Binance or other exchanges. I don't have an account there, so I can't really see it. And then what I have on Coinbase is just spot. It's not the futures. So the funding rates are going to be different on spot and futures. Or could be different. Either way, we'll see what it does here while it's in this area. Okay, so it's trying to set a range, and that range is the last 5-minute candle. It's a very tight range. Okay, that's a better range. Let's see what it does here. Let's see if it can hold this tight range. I will more than likely delete that limit order if it pushes up here, and then look to try to get filled if it falls back under it. Because on the push, it could push all the way up to 17. I don't want to get filled on limit right here and this thing push all the way up to my stop. My stop is setting at 1707. I mean, you could get one of these big boys right here. I'm actually curious. Yeah, now the funding rate is 0.32, so the funding rate's going higher. It's getting better for longs. It usually sucks. Yeah, I gotta get out of that. It usually sucks when the asset, it's because it's moving so much why they're playing with the funding rates. It's just a way for the exchange to take more of your money, is literally all it is. So here we go. We're getting above that level. And it did give a deeper push, not quite to 17, but it still could. We'll see what it does here. So not much in terms of like intraday resistance. See how more aggressive the candles are getting? It's because of them funding rates, man. It's insane, but it is what it is. It doesn't make sense for them to do that on an asset that's run up 1,000%. It seems like the funding rates would be a lot more heavily skewed to the downside to pull in more sell side liquidity. It seems like you have plenty of buy side liquidity. Is this a new asset? It is not. I don't know how long it has to be on exchange to be declassified as new. But it is not new. Jelly is back up today. It's up, well, it's up 33% from where it was at this time yesterday. Okay, so yeah, as far as entering the short, I don't like it because you're still pushing up. I wanted to see just a wick above and then right back under. I'm not getting that. You do have heavy volumes up in here. I don't know if that's going to be enough to stop price. That could also act as a liquidity push. The candles do not look big. They look small, but they are not. Like the amount of movement that is happening in each one of these candles is quite a lot. So this 1 5-minute candle right here is a 6% move. So if you're trading with any leverage above 20x, this is a big enough move to stop you out. Right? And we know that retail trades with 50 and 100x. A lot of retail does. When it comes to Bitcoin, they do. We can see this simply by going over here and pulling up the liquidation map as it shows you the leverage on exchange. Your yellow is on Bitcoin 50x leverage. Orange is 100x leverage. Like that's all that's sitting around Bitcoin's price action right now on Binance. 100x. 100x, baby. Welcome. People love to gamble. So those people that are trading with 100x leverage, a 6% move is going to stop them out. Brian, on that chart that you posted in my DMs, dude, I don't know what asset that is. You're just showing me a random 15-minute chart with a symmetrical triangle. The prices resemble that of the ES futures or the SPX cash market. It's got to be one of those two, but yeah, I'm typically looking for symmetrical triangles on dailies or 4-hour charts, not a 15-minute. And that's only a 2-day symmetrical triangle. So simply by it trading up or down on this day, today, you're going to break out of that triangle. So I mean, I don't understand how. I mean, I don't see how. I guess you could use that to manage your risk. I don't really know what you're asking me, or I don't understand. But here, let me go pull up while we're waiting on this thing, which we're not doing anything with it. It's clearly going up. The funding rate is up even higher, 0.4. So it's like prices accelerating to the upside here almost as quick as it accelerated to the downside, and they're putting funding rates to skewed for bullish positions. So I'm definitely not giving them any more money while they're doing that. That's highway robbery. That is straight robbery. All right, here, let me pull up the cash market first and foremost. I don't have pre-market data here, so let me pull up the SPY. That's probably what he's looking at, whoever that is. Here is the symmetrical triangle that he's looking at, whoever he is, or whoever that is. Nope, it has to be here. Let me see. Open link. Here. So, yeah, that wick high right there. Okay. At 65.20. Go back to the SPX. SPY, sorry. Because I mean, I could use, what is this? Give me the chart, dude. Let me go to the SPY. It's the same thing. It's not going to be exact, but it's that wick. Post market. So he ignores yesterday altogether. So that's the wick high right there. And then he just uses yesterday's low. So clearly, just by opening today, you're going to break out. Just by opening, you're going to break out. You're already breaking this. Just by simply being. It opened as a breakdown. So I guess you could have shorted. But instead of looking at it like that, you could have just simply looked at the resistance level as well and caught the same trade, right? As the highest closing 15-minute candle from yesterday marked the high of day. So just as good, right? But same thing. You're just now taking out yesterday's low. So next area of liquidation is yesterday's high. Did you get yesterday's high pre-market? You did. So there's no guarantee that after running yesterday's low, you're going to come get yesterday's high. But the level of volatility that we have here on the VIX today says that it's absolutely possible. I mean, it's the same size of yesterday's range. This was a news day. It's going to be NFP, so clearly that range is much larger. Yeah, I mean, I guess I can see the point. But technically, it isn't broken down yet. You could have absolutely scalped a few points out of that for sure. For sure. Yeah. I'm kind of staying away from the ES right now based on the simple fact that there's not enough volatility. So it's almost impossible to get 10-point moves. I mean, if you shorted the high of day yesterday, it was a 25-point move. I guess you could have gotten 10 points out of that. Same out of this. If this is what you're looking for, stop short. Would I expect downside continuation because of this over here? No, I would not. Absolutely not. Simply because this thing is trading. I mean, yeah, I guess you could say you're far enough away from the 21 to potentially come back and retest it for a reversion. And the VIX is green today. So if the VIX stays green, I like the short to the downside. But if the VIX tops out, this is going to be a buy the dip at potentially support here, which you've not tested yet on the futures. On the SPY is different because you're not seeing pre and post market data. That's Monday. Friday's range is huge, but daily support is pretty close. It could be a buying opportunity is all I mean. Like all I'm saying. If it fails if it struggles to get a break and continuation beyond that point, I would be very careful holding shorts. Because if you just come over here and put that as that's your daily support, so it traded down to it pretty much to the point. It did yesterday too and really didn't get anything going. So it might break, might not. As long as you're trading above the 30-minute 100, I would have to have a bullish bias, not a bearish bias. Because you broke and closed below it here multiple times, like 1, 2, 3, 4, 5 candles, all closing under that 100. And then Monday you gapped up and held like you never even tested it. So the trend is going up. The very quick moving averages are starting to roll, but these are all four of these are going to be calculated based on candle closures. So if this candle, you still have 4 minutes on it. If it were to close up here, the 21 is going to move back to the upside. Take profits anytime you're going against the trend very quickly, please. Like when we're trading against the trend, we have to be quick to take profits, because when we get the move in our direction, we take profits, move our stops, we get stopped out of those positions most of the time. Maybe not the same day, but eventually. Like 2-3 days from now, this is probably going to be trading above 649. If CPI comes in like anywhere close to expectations, and the market obviously takes it in a positive light, you're probably going to make fresh all-time highs. The VIX is trending lower. The VIX is an oscillating metric as well. It's not a trending metric. This is an oscillator. It oscillates with volatility. And currently it's like on the year, which we won't use the all the year data because of April's bear market. So if you just use the last 3-4 months from June to September, you are trending lower. You are making lower monthly highs and lower monthly lows. So as of right now, the VIX is no longer oscillating. It is trending. Once it gets back into oscillation, which it looks like it's trying to do here, then those quicker day trade scalps will be back on. You'll have more of a two-sided market potentially. But yeah, as long as you're trading under 1721, my longer term bias on the ES is to be a buyer on dips. The trades don't always work out though, that's for sure. They do not always work out. I'll be the first one to tell you when I'm losing a trade. I don't mind losing trades. It's not about that. It's about keeping the losses small. Looks okay. Tesla's red on the day. So we tested the top edge of this channel. Not quite, but we did liquidate the previous month high. That's your August high right there. So September made a fresh monthly high and immediately retraced right back into August's range. And for now, you're making a fresh weekly low, but last week still looks okay. So for Tesla moving on this week, if it can hold 340.74 for support, I could be a buyer there. Your actual weekly demand level is going to be 338.90 for Tesla. It isn't trending really. It's just, it's trading sideways. The May high is the high that it needs to clear, and it needs to see upside continuation beyond that before you can say that you have a breakout on Tesla. It's trading like it's in a long-term range, but forming a near-term channel inside of that 4-month range. That's why I said you probably don't want to be a buyer on Tesla up in here. But August's midpoint is where we bounced last time. So for bullish continuation on Tesla, I would be all right with a liquidation under this as long as that's all it does. Just drop a wick under it like that and then gap up. Then I could be a buyer again on Tesla. But it might even hold the support here. We don't know. There's not really a support zone here. Not really a gap either. I mean, there is a gap. There's a clear gap from this day to this day. But the previous day traded up into that. So as far as the market's concerned, that's probably good enough for gap fill. Oh, it may hold support today. It may not need to come back into this weekly demand. It might be able to hold from there. Doesn't look like it. I mean, this does look like a clear take profits kind of sell type of trade. But we've also seen Tesla put points of controls on the bottom side and sell off even harder. And you got that from the previous day. So it looks like they were literally selling the midpoint check of the previous day, right? That's where the bulk of the volume comes in at the highs of the day. Around 350. 350 is a big figure number. And it would be real close. Right in here is your midpoint of the day range, like 351. They front ran it this morning. So for downside continuation on Tesla, you probably don't want to see it closing back above 347.15. That candle's closed there. You want to see that hold. Weekly demand here, gap fill there. If it breaks down under this, then obviously the market's saying gap is not filled good enough. Only time will tell what happens here. What is the Magnificent 20 doing? Apple's down on the day. That's going to put downside pressure on the market. Microsoft is unched on the day. It's actually up a little bit from Friday's close, but not a lot. And Nvidia is down. It gapped up and is currently trading low on the lows. So yeah, your big three struggling a little bit today. Amazon looks all right. Amazon looks okay. Google looks good. What's going on with Google right now? Why does it look so good? Google was struggling all year, and then once it broke out above June, it was see you later. That's what I hope happens with Tesla. Once it gets above May's high, boom, see you later. Not really seeing any news headlines that specifically focus on Google alone. But clearly people are buying it. Meta looks good as well. It's holding above the daily 21. As long as it's doing that, I could see further upside. Looks like all you did down here was tried to fill a gap. I mean, that's a big gap. But it only went down to this previous day swing high and it said gap filled. You got a small upside gap, but I don't really care about the gaps because gaps don't have to fill ever. They usually do, but Avgo is taking off, so much for software companies getting beat up. Intel still garbage. Netflix looks like it's finding support. AMD AMD's checking August midpoint right now. That's not a midpoint, but let's fix it. Yeah, so I mean, this looks worse than just a liquidation move here. You liquidated here and rolled back over. So the buyers bought it here on a liquidation break, and it failed. One leg consolidation, leg 2. Did you get that swing low there? Yes, you did. This swing low on AMD is 149.34. 149.22. So that's a much deeper push. That's a liquidation, and you're gapping up. So moving on AMD, if you can hold support, I would consider that. Is it gap village in the village? No, but is it close enough for gap village in the village? Yes, probably. If it trades away, then yeah, of course. I would watch support 151. 14. 151.14. That's the close. That's your daily support. That one's higher. If support can hold on AMD, you can be a buyer. If you're trading under support, you have to be careful because it could be making a run down to 147.70 to fill the gap. That is just under near-term price. Looks weak on the week. It looks sickly on the weekly. As you're not really doing anything here. That daily support's also going to be weekly support. So you got 2 time frames of confluence. Weekly 21 down at the 786. I think AMD could be a buy down here. Potentially. If it does break down. It doesn't have to. It could hold this area here. But if it does break down, like today, today and tomorrow, if it's like failing to get above the 236, it's going to look very sickly. Then I would wait to be a buyer lower. But a weekly 21 test and hold is a buying op. Boom, boom, boom. Very choppy through here. Would have been a difficult trade, but once you put in that bullish engulfing, it would have not been so difficult to be a buyer on pullbacks into the 21. I mean, your 50's back above the 100, your 21's back above the 50, so the moving averages are all back in line the way they should be on AMD. Even. It's a weekly chart, so it takes a lot longer to fix your 21s, but I like it. If 143.99 holds on a weekly closing basis, I would be a buyer on that. So we'll keep it on watch. It still might have a little bit more to do here. Baba is going off. We were looking for a correction into this area. We did not get it. We don't need it anymore. Yeah, Baba was extremely strong. I don't remember what day we looked at this on. I will assume we looked at it on this day. Simply because that's where the line stops. Yeah, we were watching September's open, and I mean, there's no way to know that's going to happen. That's a huge move. That's a $13 move. If you're long, keep holding it. It looks good. If you get back under September's open, then it's not going to look good. So if you're long from 134 and under, I don't see any reason why you need to do anything with it. Funding rate is on. This thing is absolutely going bonkers. Again, you're back up 22% on the day. Funding rate is back up 0.8 on the funding rate. It has been a pretty much one-sided market since it got into this region down here today. The funding rate changed and the buyers bought it right back up. And it's been on it like just straight up. So now anybody that sold for a trendline break is stuck. If they haven't gotten out yet. This looks like it's wanting to break the highs. It's impossible to buy because it's not basing. Basing and then ripping to the downside. Same scenario here. Bases, breaks, and rips. So maybe wait for that. Wait for another base set, break down. It's going to be quick timing it because here you bought it. You did get a deeper push the next minute. So wait for the next minute to open. See what it does. Wait for it to base. Let it break. Give it one more minute. See what that thing does. It's so risky buying it up here. But it didn't really give a easy opportunity to jump back in it on the long. I mean, it didn't give us a 50-point test, a 50 retracement like that midpoint check. I don't think I would consider this a breakout and a new base. I would consider it all just one base. So maybe watch for a 382 check. As you broke back above the 50 here, came back in, checked, gone. You haven't checked the 382 yet. So maybe wait for that. And then, if it looks like it's going to stop going lower, for instance, if you don't even get a wick through, that would be good. You could manage your stops down in here. If you're using light leverage, then you can manage your stop all the way down under this low. If you're using heavy leverage, you're never going to be able to do that because your stop is going to be a 5% move. 5% on price is much bigger when you put leverage just on that. It's so much bigger. This thing is crazy, bro. Anything else moving? Not really. Flock is still in the number 2 spot and it's at 56%. TA's bouncing. This thing is a pump and dump so bad. It would be hard. I don't think I could buy this. Not with that kind of price action. It's not holding support ever. It's like when it starts selling off, it gets going quick. Also, I don't necessarily want to sell it down here. It's a daily res test, though. I cannot believe this thing has 2 massive wicks back to back like that. You never made a fresh daily low. $15-minute chart looks like dog poo, though. What's the funding rate look like on this? Probably normal, I would assume. TA. 34 million in volume the last 24 hours. Funding rate looks okay. It isn't a risk on day, but yesterday it was a risk on day. But today's just a pullback. As long as the midpoint of yesterday is intact, all you can say today is a pullback. It sold an hour, 2 hours after the London session opened, but it hasn't done anything since. $21's all the way down there. Yeah, I mean, I guess you could say it's still a little bit dangerous under the midpoint for risk off, but I mean, that's a pretty good break. Will it hold though? And Forex is really choppy. Not much trending going on there. I could see why people would be interested in selling it. Yeah, if you're holding BABA, just keep holding it. What's the news that dumped US? What dumped? The revision. So we had NFP on Friday. You had an NFP revision at 10 o'clock. And it was revised lower. They were wanting a higher revision, obviously. And it was revised under 911. Last month, it was negative 818. The revision for this month was lower than last month. And that sent Bitcoin down. So that's even crazier that Bitcoin is selling off pretty consistently so far today, and that NYX trade is still pumping. Insane. All right, I guess we're gonna wrap it up. Nobody's got any questions. I'm still sitting in USO, Tesla, and GLD. GLD was real close to having a strike in the money. Today's sell-off under 335 is what took us right back out of the money on GLD. Yeah, we're long the 335 call and we're short the 340 strike. All the way out to December though, so we got plenty of time on that trade. Gold is clearly at all-time highs. We just needed it to go a little bit higher. We could have bounced. But it still looks okay. I mean, gold was the big trade coming into this last week, actually. Because last week is when it started to do the breakout. After it failed to break down through here, that was a clean signal. That's what we don't want to see on USO. Because you have put in the false breakdown here. This is the wrong chart. Here you go. See? So this is a false breakdown. If dollar bounces, it could help USO retest the yearly opening range again because of this fake breakdown. Gapped up, gapped up. You could hypothetically, I mean, it's if it wasn't for that 21 exponential, if that 21 exponential was a little bit higher or a little bit lower, it would be a little bit easier read. But you can see you do have a clean symmetrical triangle here. It's not on the daily, on the 4 hour. Okay. You have a clear breakdown here. Clear. So when we should have seen downside continuation on a resistance check, we didn't get that. We got a gap, a full-on gap up back into the range. So the next couple days on USO, if it closes above the 21 today, you can see it gap up and gap up again. I'm not expecting USO or oil to be super strong here, but it does track oil, and oil I mean, it's a fake breakdown. It's been very, very sloppy. I mean, this looks okay for downside continuation. That's the best case scenario you could make. It's still a false breakdown if we compare the two charts. I just need to see real quick where I put that swing low at. So May 30, that's going to be May's low. So May's low here on oil, right there. Yeah. False break, and then yesterday it gave you a little bit more hope, and no. So if it gets going to the upside here, I mean, it's going to have a little bit of resistance to get through, clearly, but there's no reason why if it doesn't break out, it couldn't get back up to 65, which would then put USO back up to 76. That's why if you're in this short, you're going to have to exit it on a close above the daily 21, or you could exit it now and take a little bit smaller of a loss than waiting for it to close above, as the loss would be bigger. Could this be a fake out move? I mean, I couldn't see who you're faking out, really. Maybe it's struggling here based on that daily, but the bears that are trapped from Friday and Monday. These guys are the ones that are trapped. So if this does get any kind of bullish momentum today, these guys are probably going to bail. You're trending higher. Yeah. So that's it. That's the one I would be very, very careful. I don't think I would hold it much more above the high of day. I would probably get out of it because you're threatening a larger break to the upside here. We didn't get the move we wanted. It's literally a trap, and it's caught us. So it's done a real good job intraday holding the 21 on the 5 minute. Dollar is still bullish. Dollar's trading up at highs. Day highs. Day highs that could give oil strength. S&P pretty much bounced. Yeah, it looks like it put in a liquidation on the futures. It liquidated Monday's low. Wait a minute. No, that ain't Monday's low. It's just a higher low. Yeah, ES is moving right back up. Like I said, it's difficult for me to be a seller on the ES when it's a buy the dip market. All right, you guys have a fantastic rest of your day. Be careful if you're trading that crazy crypto, as that thing is absolutely bonkers. You're up 23%. It looks like it's trying to run the high of day. Be careful. It's moving a lot. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.